Hello, traders. Welcome to another daily analysis for February 15th. We are right now just about almost an hour into the London session for February 16th. So, first thing first, it was quite a very non-active session because we don't have any tier 1 data. Only until New York session we will have several data from US, and then we should see a bit more volatility. And then later on we will have the retail sales from New Zealand. So aside from that, let's get into what happened today. So today was another busy day for the previous London session or the New York session with a lot of fundamental data. So first we had the climate count change and average earning index in UK. Now these two data came out as mixed because climate count change was a large positive deviation for the job market, but average earning dropped about 0.2%. And of course, in this kind of mixed data, I don't really trade when I don't have a congruent direction. Because sometimes you have to understand we don't know which data that the market is choosing to focus on. And then if you want to get more insight, most likely the market will choose to focus on whatever the central bank is going to focus on. So it depends on the most recent central bank comment or statement, and that's where traders or investors are looking at that particular data. So for example, the climate count change was a large drop, which is very good for the job market. However, Bank of England had said before that they are focusing on the wages, right? They want to see whether the wage can grow in spite of the inflation. And however, that was not the case today. So that was a bit of worry sign. And that's why pound had been sold off after the release of the data. Also, to note that the climate count change was a huge drop, but that's mainly because rumor has said that they use a different calculation method. That's why you have such huge deviations. But nevertheless, let's just give you a bit of insight that whenever you look at the recent events or a certain data, it really depends on what the central bank is choosing to focus on. And that's also depend on what the central bank is leaning toward, because for example, later in New York session we had consecutive of inflation data and retail data, and then everything was once again very solid for the US dollar. But I read a piece of news article by Forex Life says that it's very interesting because whenever you have a high inflation for a certain country, it doesn't necessarily means anything, because it really depends on how the central bank wants to perceive that. So when, for example, in Europe, when you have a consecutive high inflation in January report, the ECB just brush it off, saying that, the high inflation came because of the oil market, right? Because the energy price had picked up. Well, basically saying that it's not important for us right now. We can tolerate a higher inflation. When it happened in US, Federal Reserve basically saying that, okay, this is a sign that we should hike rate sooner than later. So it really depends on central banks, how would they like to perceive a certain data. Same thing happened to Australia. Like I said, you have a very soft employment data, inflation data, and very negative GDP, but RBA choose to brush it off, saying that it's just a temporary thing. So really, that will be the main driving force, fundamentally speaking. So that's why pay attention to the central bank is very, very important, or whenever the bank members are going to speak. So as I mentioned, New York session, the retail data and CPI data, both headline and core, are very positive to give us another fundamental solid picture. So US dollar went up immediately, but later on we have the kind of soft industrial production that was a disappointed figure. Chairman Yellen testified again today. I didn't watch the live broadcast. I don't even know whether there is live broadcast. But basically, everything is still the same because she delivered the exactly same speech and the statement. So it really didn't cause too much volatility. On the contrary, we did saw a lot of US dollars selling, and there is no fundamental reason to back that up. So most likely it's either the profit taking or it's just a technical trading. That's just a very normal cycle for the market. Whenever you hit a certain resistance or support, there will always be amount of buyer or seller looking to get in. And that's why even I am a fundamental trader nowadays, I don't disregard technical analysis at all. I think it's very, very handy to understand that in certain zone or area or signal that does have their importance, because a lot of traders are looking at those areas to looking to enter or exit. Crude oil inventory was once again a large build, but that doesn't really affect the oil market too much. As I mentioned, we have sort of diversion right now between the U.S. shale producer and OPEC member, and that will be even more interesting when the tax reform coming out in the next week or so. That will maybe give us an insight of exactly what kind of border tax plan that the Trump administration is going to introduce. Later in the Asian session, we saw the employment data from Australia. Now again, that's another interesting thing to learn from, because the data was positive for both unemployment rate and employment change. But as I mentioned, whenever you're looking at this kind of data, you have to look into the details. So if looking into detail, the unemployment rate dropped due to the participation rate also dropped. So that two just hedge out each other. Employment change was positive, but when you're looking at employment, you always have to see whether it's coming from part-time or full-time. Now, of course, if you have more full-time number increase, that's a more solid economic picture for a country. For Australia, however, that was not the case. The employment number had better than expected, but had a large drop in the full-time people. So that means that there's a lot of part-time workers right now, and there's less participation rate. The labor market is still very soft. So it really didn't give Australian too much fundamental boost. On the contrary, it just continued to signal a weaker element in their fundamental perspective. So as I keep mentioning, that if by the end of this month, the next GDP report, if that comes out as another negative data, then there is higher and higher possibility for RBA to cut the interest rate. I know the RBA is very, very hawkish right now, and that's why I am personally long in some of the Australian dollar trade. But I know it's most likely a sentiment driven, and for me, if we have more and more negative fundamental data, I will definitely get out of my Aussie trade. And on the contrary, I will actually holding a more short position in Australian dollar. Today, we also had Donald Trump meeting with Israel Prime Minister, and they had a joint conference. This one I watched. It doesn't really cause too much volatility for the financial market. I watch it just for the sake of curious into the current update for the Middle East, and it was fun. Fun to know a little bit about the politics. So my personal view right now for euro dollar, it continued to be a negative currency, both fundamentally and sentimentally speaking. Now there weren't any too much update fundamentally for euro. So the only thing that's driving the headline is always this politics and the political situation. Now Dutch is going to have their election very soon in March. France is April and May, and Germany is September. So same thing, the political element is the main catalyst. ECB, there's nothing new. I would say perhaps the near-term data-driven will be the Greek debt negotiation, because that one is on the table right now. But most likely it will drag out as just the nature of this kind of tendency when dealing with negotiation. But the sentiment and fundamental speaking are both looking to the downside. So euro dollar, you will see a lot of buying today. I mean, you have seen already a lot of people are taking their profit because euro had been dropped consecutively for almost 7 days, which I'll show you in the daily chart later on. So of course, it's very normal to see a little bit of buyback, but that doesn't mean I will buy it. It's just on the contrary, I'm looking to get into it right now because I missed the whole downtrend previously. So I'm looking to get into short euro dollar, especially if we climb up to a better resistance level. For US dollar, the inflation and retail data today, continue to support the case that Federal Reserve right now is really going to hike the rate maybe sooner than people's expectation. Now, Fed has came out many times before saying that they are a data-driven central banks. That means they do look at the data instead of looking at the politics. Of course, some people might argue that they do take into consideration for the politics. That's why they hiked the rate so slowly last year, only after Donald Trump, after the election. Nevertheless, this year, that part had been removed. The normal election for US, the only thing right now will be the new fiscal policy, and now it's looking to be a more stimulus direction. So that give a more possibility for Federal Reserve to hike the interest rate. So right now, US dollar is very bullish. It's looking to go even more bullish, both fundamentally and sentimentally speaking. Now, sentiment-wise, very nice week without any jawbone, crazy behavior from Donald Trump. As I mentioned, ever since the meeting with Abe, things start turning in a nice direction. He stopped attacking all his allies. It even made this nice phone call with Chinese Prime Minister, and so things are turning more bright from that perspective. And fundamental data continue to support a strong dollar. And even dovish Yellen actually came out with a much hawkish tone. So that's all a very nice reason to hold a dollar strength in a more long-term perspective. So that is the current stance for US dollar. British pound, again, today disappointment of wage growth will be a negative catalyst for British pound. But for me, again, it because of the Brexit negotiation and the triggering of Article 50 is coming up very soon. Unless we have a clear picture, British pound remain to be a sort of a neutral currency because you do have the equal amount of buyer and seller. Maybe more seller wants to sell pound, but pound really I don't know where the direction is right now. So I'm staying out of it for a daily perspective, unless I can pair it up with a much stronger currency like what I'm in currently, our short pound Aussie trade. Those are the only things. Maybe pound cable now will be a good trade to short, since now we have a much stronger and clear picture for US dollar. Now, Australian dollar continue to be a fundamental bearish currency for me, but sentimentally it's very strong. And the only fundamental driving force that is backed it up is the central bank. Now, that's a very strong force, I have to mention. Keep emphasize on that because central banks makes this policy in order to drive the currency. So really, if they are going to be bullish in their own currency, regardless of the fundamental data, then it's best in your interest to follow through. However, Aussie is at a very high point. So, you either get in with a larger stop loss and only pair it up with a much weaker currency. But if you want to do trades like Aussie dollar, it really, I wouldn't suggest you to long or short. Just maybe wait for you have maybe a clear direction. For New Zealand is actually the winner for the day, and I am personally very biased in terms of the fundamental for New Zealand. I'm very bullish in it because I just feel like New Zealand dollar has a much better and congruent fundamental picture. And this large drop was caused by central bank last week, but that sentiment has to be backed up continuously. So if central bank fail to back that up, then eventually New Zealand dollar will revert back to its fundamental picture, which is quite bullish right now. So I am still very bullish about New Zealand dollar, but you just have to know that Central Bank of New Zealand is trying to talk it down constantly. And that's of course for their own benefit because they don't want the currency to be too strong as they are an exporting country as well. And New Zealand dollar tendency to be bought off due to their high yield currency. Japanese yen and Swiss franc both are neutral position right now, and they are fundamentally bearish right now because of the risk on sentiment. The stock market, especially U.S. S&P and Dow Jones, we are on this consecutive bullish trend, and it's just going higher and higher. And we do expect this thing to keep going until the tax reform plan finally being released, maybe next week or this week. So the stock market is looking very promising for the US and the global market because of this tax plan. But again, it might be a buy rumor selling effect. So this trend, of course, will have a big retracement. We just don't know when it's gonna come. And you gotta understand that the market can always stay irrational or can stay very, very excited for a long period of time. So you don't wanna be there to catch that falling knife, as I keep mentioning. So pretty much that's the main picture right now. Not really doesn't change much. Today I didn't really got into any new trade. I didn't establish any new trade. So really just I was trying to. I actually took a pound trade by accident because as I say, I got into it on the release of the climate change because I was really excited to see such a large drop. And only to read into the scope to realize, but the wages are also dropped. So for me, it's more like a trading mistake. I got out right away, within 10 pips. So they still lose some money, but I'm glad I got out, because and it does happen when you're trading the risk event. Sometimes you are maybe you are not focused, or maybe there's too much data to absorb. This kind of human error it does happen to me, quite often. The thing is that it's fine to have this kind of error. You just have to, if you are wrong, you gotta get out right away. Don't stay in there just because then you are hoping, and hoping is never a good strategy for trading. So pretty much that's what's happening right now. Let's take a look at my current daily trade. So right now, all the dollar trade I have having a very large retracement. You see dollar yen, you have this kangaroo tail. And for me, as a fundamental trader, it's not something I will short or get out, right? For me, really, I establish a trade fundamentally when we use a technical as a trigger, but I don't exit the trade technically per se, especially in this kind of swing daily perspective. But if I am in a more intraday position, then yes, I will have a much shorter time frame, and I will use a much shorter method to get out. So if I'm in an hourly trade for a risk event trade, things like that, then yes, sometimes I do get out because of the candlestick or because of the short-term resistance. But for daily or weekly perspective, really I'm holding it more for a fundamental perspective, and will only get out if the fundamentals switch. So dollar yen, but that's me personally. If you don't feel comfortable, you can always get out if you have an opposite signal. Dollar yen, dollar Swiss, the same thing. You have this very strong reversal signal, and we are acting already. Now my personal view is that we will at least come down to 1-0 or even 99.50, things like that, before we take off again. For me, it's just no point to get out because I'm not just pretty much the break-even trade for me. So it's like I used to get out very fast, but I realized it just doesn't work. It kind of jeopardizes my method because I enter as a fundamental trader and I want to get out as a fundamental trader as well. So for me, it's really depend on how much percentage I have in terms of my analysis. So if I get into a trade, 90% of the reason is because the fundamental analysis, then I want to get out because the 90% of the reason because of the fundamentals. If on the contrary, I get in the trade, maybe have 50% of the reason is technical, then I can always get out if 50% of the technical has changed. So it's just trying to stay in a more congruent approach. I find it will be a much better way because a lot of traders, you get into, say if you're a technical trader, you get into technically, then you want to be congruent with your approach. If you get in a trade 100% because of your technical analysis, then you want to get out because of that technical analysis. You don't want to get out because the fundamental has changed, because that was not the reason you got in the first place. So that's why stay congruent is very important. If you have a 70-30, 30% is technical, 70% of is fundamental, then you want to stay in that approach. Now the worst case is that a lot of people get into a trade because a technical analysis, and then suddenly they read a piece of news or somebody tell them something fundamentally that changed the picture, and they get scared and they get out right away, only to see the trade work out in their favor. And that's something I think it's a pitfall for a lot of traders, including myself previously, because you are not stay congruent with your approach. And being persistent is perhaps one of the most important personality as a trader, as a quality that a successful trader should have. So that's my dollar trade, and my pending Aussie trade, yesterday also got feel, this is nice bullish candle. I got feel today. Of course, we are having a retracement right now. Aussie yen also got filled, and the other one is Euro Aussie. Daily perspective also got feel of this candle. So no surprise that we have this kind of retracement. But fundamentally, things are still looking way much better for Australian dollar versus Euro, Swiss franc, or Japanese yen. So that's why I'm still holding this trade, unless we have any fundamental structure change. Otherwise, for example, today, even the soft employment data, this is not negative enough for me to get out of the Aussie. However, if the GDP report comes out very negatively, then that will be a very good reason to not get into Aussie. On the contrary, you can short Australian dollar because of that. Another trade I'm currently have CAD yen. Again, we are at this very obvious resistance area. So of course we are going to have a little bit pullback. Not strong enough reason for me to get out. We do have a large build up for the oil market, but again, it's because of the divergence between OPEC and WTI. So I'm not, it's not, and right now, if you want to ask me, it's fundamentally, I think it's still going upside, but in the near term, it's kind of coolish, right? Because generally, when you have a large build up, oil market will drop significantly. It was not the case. We have 3 large build up previously already. Oil market did not drop, and that just shows you how strong OPEC catalyst is. So if that's the case, then OPEC members have a much stronger influence for the oil market. If they say they are going to drive the price to $60 per barrel minimum, then that's what we are going to see, most likely. Another trade I have is Pound Aussie. Yes. So Pound Aussie is also the trade I am currently in because of this. I sold on top of this trigger kangaroo tail. Got in right away, draw down right now. It's still looking to the downside. Also technically it looks much better, but if you ask me, I actually have less conviction toward Pound Aussie versus all my Aussie trade. Now the reason is because I have less bearish conviction toward British Pound. I think British Pound, it's more really in a neutral perspective, and as I keep mentioning, anything positive, especially from Brexit, will cause British pound to go up, or anything positive for the fundamental data might also cause British pound to go up. The only reason I'm having a conviction for a downside is because Bank of England saying that they are going to hold the interest rate for quite some time, and that's why if you remove that element, then British pound has a more bearish sentiment into it. However, if the inflation continue to go up, then Bank of England will have no choice but to hike the interest rate. So I'm happy today that was not the case. I'm happy that we have a low wage growth today from UK. That means that it has more probability for British pound to go to the downside, and that's why I'm still holding this British pound versus Australian dollar trade. The other trade I'm in, of course, New Zealand dollar. This one has been in for quite some times. And as you can see, it finally react to it. Right now, we just break above 0.72 and looking to go upside. Now, this one I am much confident for New Zealand dollar. And for US dollar, because of the strength right now, so as I mentioned before, might not wait for my target. Actually, if we maybe going to 72.50, which almost hit it, I might just get out when we are here. And the reason is very simple, that although New Zealand dollar is very strong, but US dollar has changed fundamentally in this week, right? Because of the Chair Yellen's speech. So that is a structural change, because if she is on board with this kind of hawkish tone, then really there's no stopping for Fed to hike interest rate much faster. Doesn't mean they will do it in March. It just means they will do it way much sooner. And if you look at the futures market, the implied volatility has increased significantly for the March rate hike and for the next meeting after March. So that just shows you a lot of futures traders are already priced in. And that's why then it's not going to have too much downside movement for New Zealand dollar. So on the other hand, because of the bearish sentiment from RBNZ, so for me, maybe it's not a trade that it's gonna go too far anymore. So that's why I'm actually looking right now. We almost approach 72.50. I think we will hit it because US dollar is quite weak at right now from this session, and that could be really a profit taking continue until maybe later in New York session. So I'll see what happened, but most likely maybe I'll profit at 72.50 for this trade. So not going to hold on to this trade. So pretty much that's it right now. Let's take a look at other currency and see if we have anything. Just give me 1 second. So Europe pound, again, fundamentally not something I will get in, but if you want to know the force, I think is stay with British pound more. You just really on this sideways movement, right? Very small candle, really nothing happening here. Euro Swiss also not something I will get in, and we don't have any signal. Euro dollar is the one I'm looking to short. We have this nice kangaroo tail today, and again, like I said, it will react to it just because, you know, technically a lot of people are selling it. So the next support zone, of course, is 107 handle. If we can have any reversal signal right here, it would be perfect to sell. 10A will be another good area, but I don't know if we'll climb up to that high. Really, most likely not, unless we have a very strong sentimental reason. Otherwise, 107 will be a good area to short, providing if we have any daily reversal signal. Euro Aussie also is something. Well, I'm in this one already. So Euro CAD, also something I'm looking to short. Again, we are having this reversal signal. Technically speaking, 1.4 will be nice area, definitely to short around here, around this zone. Euro New Zealand is another thing I'm looking to short. I don't have any signal right now, and unfortunately at 10.4850 it was a nice area, but we don't have any daily signal to get into it. We didn't have any daily signal. Euro yen, not something I would do particularly. British pound also is something I stay away, especially pound Swiss. Now cable, it could look into short, but if you short yesterday, you actually had a bit of a drawdown right now. And the reason is because US dollar, it's looking to go in upside for sure, but US dollar still has this underlying sentimental negativity, and unlike other country where the negative sentiment, especially for Eurozone, was driven by a lot of elections, US dollar, the funny thing about it is that the only negative sentiment is the president himself. So that is still a large effect for a lot of trader or large money. People are don't want to get caught up. If you read a lot of report from major hedge fund or major big banks, every bank's pretty much or hedge fund have the exactly congruent point of view that everyone is looking to buy US dollar, but everyone is also very cautious because of the negative sentiment of Donald Trump. So we are only in this first week of, I wouldn't say positive sentiment, I would say non-negative sentiment from him, because previously pretty much every comments or action of Donald Trump was very, very negative. So only until last Friday, the meeting with Abe would turn out to be quite positive, and then he made phone call to Chinese Prime Minister, and this week again he meeting with Justin Trudeau from Canada, all the way until today meeting with Israel president. I'm looking to see what happened between him, Russia, and him, and especially the Middle Eastern. But those are more like in the political situation. It's not going to affect the market too much. Janet Yellen was a big volatility for this week, and now it's proven to be a nice sentiment. So US dollar finally being picked up, the sentiment has picked up finally. So I am looking, the cable is good to short, but I don't want to get into now. I really rather waiting for a much stronger signal, because previously this candle, it's really just a ranging area. You don't really have much space, on the left side. So for me, it's not really a significant bearish candle will look like this, right? You have, the tail is trying to penetrate into a new high, which fail. Those are the much better bearish signal, or something like this, or something like even like this. These are all much better signal whenever the candle, or whenever the price action is trying to penetrate to a certain area. Where let me zoom in. Where you have this one, it doesn't really go anywhere, right? You are right below 1.2550, which you have previously. So the previous one, this one will be a much better one, or even this one. But nevertheless, that's a picture right now. So I'm really looking for it to either break a little bit higher to let me to short, or break to the downside. So either way, cable will be a good goal right now. But it only became a good goal after these 2 days of Janet Yellen testify. So that was the reason we didn't get into cable trade. Pound Aussie, against the one I'm still in, but I am less and less confident to holding this one. The reason is because the weakness into Australian dollar, especially fundamentally speaking, versus the neutral position of British pound. So this will get me a little bit worried, and I'm still looking for it to at least touch 1.6. That's what I'm hoping for. But we might not have that, so we will really have to see exactly what happened. We don't have any risk events coming up from British pound. We do have one actually in Friday. On Friday, we will have the retail sale. That one will be interesting. So maybe that will be the catalyst for me to get out. And the reason is because retail sale, again, it's a huge component for British pound, for UK in general. The consumer consumption is very important, and retail sale can tell us exactly where the inflation is. If the inflation picked up too much, it will deteriorate on the consumption. Product will become more expensive. So that's what happened previously. If you look at the retail sale data, let me just do a quick. I don't have it right here. Just give me 1 second, please. Okay, let me get the Forex Factory. So if you're looking at the retail sale this Friday for UK, and not this one, that's New Zealand. So look at previously. So last year, so let's just look at the previous 5. But last year, you have minus 0.2, and even it's 1.9 in November. This was a nice surprise for people to know that, wow, UK had held up pretty well after Brexit. And then you had a little bit drop in December, and the big blow really comes down to January, when you actually have large drop from the previous or even from the forecast. So this gets people start worrying, saying that, okay, now the effect of the weaker sterling really start kicked in for the economy. Now it's not looking too well, because once it continues, then not only Bank of England will not be able to hike the interest rate, they actually have to stimulate the economy, because right now it's getting into a recession. So that was what happened last time. So this time the census was 1%, much better. So if we have something below it, or even more negative than this, then that will be a very negative sign for UK. So that's what I'm looking for. Let's see what happens Friday. If we have a nice, way positive retail sale, I will get out for my pound Aussie trade at the moment. But if we have something that's very negative, then I will be able to hold pound Aussie for longer. So for pound cat don't really have anything here, and pound Newsy also don't have anything here. No. Pound yen also it's just much more in a sideways movement. So British pound, if you look at British pound, you realize the bigger general picture is in the sideways movement. Especially any pound pair usually have a very large daily range. So, but it has been driven by catalyst. So if you don't have any catalyst, what happened to a British pound pair is you have this kind of consecutive of no direction. So you don't want to get in this kind of trade. It's just really you are exposed to nothing. So for British pound, really understand a single piece of catalyst can either shoot it up or drag it down very, very fast. And that's what you want to wait for. Swiss franc, Japanese yen, again, not a pair I touched, so I don't really have anything here. Dollar Swiss, dollar yen, as I mentioned, this is the one I'm in currently. I'm in a little bit drawdown, which I'm fine with it, just because I have a much longer time frame to show this kind of trade. Dollar CAD keep dropping due to the dollar weakness. Now look at Australian dollar. Now Aussie Swiss also had a pullback. So basically, market is having a sort of a pullback movement, and it can really contribute to consecutive of higher high for the equity market. So again, you always have people wants to profit. So that's why natural cycle for the market, it's always up and down, up and down. Aussie New Zealand also is not something I'm looking to get into at the moment. And same as Aussie yen. CAD Swiss looking to long. I don't have a signal. Same as CAD yen. I'm looking to long, which I'm in already. So we'll see how it works. New Zealand Swiss, I'm looking to long. Actually, it does have a nice, strong, bullish signal today. The only thing I don't like, again, is because I don't have enough room to go. So for me, that's something I don't really like to get into it. But it is a nice signal, honestly. The thing is just, if you don't have something like this, will be a much better signal for New Zealand Swiss. But because this resistance is very strong at 73, so it's really not a good trade, not a good position. It's a nice candlestick, not a good position for me to get into it. Let's take a look at New Zealand. New Zealand is at a much better zone, but we don't have a signal here. But New Zealand is definitely something I'm more interested in if we can have something better here, at this area. So maybe a little bit pullback, then I will be much inclined to enter New Zealand, just because your resistance level is just much further away for you to hit that one-on-one. New Zealand dollar, again, the one I'm currently in, I'm looking to get out at this resistance area. And finally, New Zealand CAD is not something I want to touch, just because both CAD and New Zealand are equal strong currency right now. So that's pretty much it, guys. I know a lot of trade, but just to recap, fundamentally the strong currency is still US dollar, and the second strong currency will be New Zealand dollar and Australian dollar, but they both suffer from a little bit of negativity. Australian suffer the negative fundamental, New Zealand dollar suffer from negative sentiment. So of course, I do think sentiment is a much less has a much less weight than the fundamental. So if you want to put in order, my bullish currency will be US dollar, New Zealand dollar, and it will be US dollar, Canadian dollar, New Zealand dollar, and Australian dollar. So those will be my order. The weaker currency is much more clear. It's Euro, Swiss franc, and Japanese yen. These three are going to remain very weak. So this is a more clear picture. British pound is more neutral. I'm going to stay out right now because we are still waiting for exactly what's going to happen for pre-exit. That's pretty much it, guys. So watch out for the pullback, and again, depend on your time frame and what kind of trader you are, will really depend on how you would like to manage your trade. So for me, that's basically what I am right now. For the session to come, really the only thing coming up will be New York session. You have building permit, Philly Fed manufacturing index, and unemployment claim. Not a tradable data for me, three of them, but it's important to affect the overall picture. Later in Asian session, New York closing, we will have the retail sale from New Zealand. That will be quite important for me. And that's it for pretty much for Thursday. So, okay, hope this video is helpful. Let me know if you have any question. Otherwise, I'll be back tomorrow with another daily analysis. Thanks for watching. Bye-bye.